In this tutorial we're going to take a look at income and expense groups. Now, income and expense groups have a couple of purposes. One purpose is to group similar transactions so that when it comes to reporting you can get some useful information. For example, if you wanted to know how much did I spend on repairs last financial year, you need all your transactions grouped together so you know which transactions are repairs and which aren't. So that's one purpose, is to create groupings for reporting purposes. But the other reason, and the main reason we're going to be looking at in this tutorial, is that different transactions get treated differently depending on which group they are in, or the settings on those groups. So we're going to take a look at those settings. So if I go to functions and choose income groups, if I go and press add to add a new one, these are the settings here that we're going to be taking a look at. First of all, the code. The code is just something simple, whatever it is that you can use to remember. So, for example, it might be rent, description might be rent received, something like that. These don't really matter too much, it's just something that you can remember. Now on this screen here, we've got all these help options, and if you hover your mouse over them, each one of them has a little bit of help to explain what these options mean. You can also go to get help up here as well, on income and expense groups up there. So the first option we're going to look at is this one, taxable. What does that mean? This refers to end of year taxes, so don't get confused with something like a VAT or a GST type tax. We're talking about end of year taxes here. So we're ticking this box to say we want to include these transactions are part of our end of year tax return. So for example, if we're a landlord, then rent would be part of our end of year tax return because that's our income, that's our profit. For property managers it probably wouldn't be, because it's actually the fee that is your income. So you can turn this on and off based on whether you think these should be included in your end of year taxes. This only affects a few reports, so it's not a significant thing. There's a couple of reports which give you the option of excluding non-taxable income. The second option we have down here is exclude from cash flow analysis. This is similar to the first one. By default, every transaction that goes through our cash book is going to be included in our cash flow analysis, either cash coming in or cash going out. Now we actually may choose to exclude some things. For example, if you're transferring money from one bank account to another, you might choose to exclude that from your cash flow analysis because it might unfairly influence the reporting. So once again, this doesn't have a major impact. There's one report called the cash flow report, and there's one graph called the cash flow graph. So it only affects those. This one here is similar again, exclude from profit and loss reporting. This just says, should we include or exclude these transactions from our from the report called the profit and loss report. By default, everything is included unless you choose to exclude these transactions from that report. I'll skip this one and go down to this one down here. If I tick this, then what it says is these transactions, or transactions in this group, are all used to pay back rent. So that's fairly self-explanatory. If it's one of these, then we're paying back rent. So you can actually have more than one income group used to pay back rent if you need it, if you have different classifications of rent. And the one down here, used to pay back extra charges. So an extra charge is an amount that is charged to the tenant for some particular purpose, like maybe we want to charge them some water rates or some electricity or some gardening maintenance. We want to charge this to the tenant. So there's a separate tutorial explaining extra charges, but if I tick this box here, then I'm saying this income here is used to pay back those extra charges. So it's the tenant paying us money to cover these extra charges. Now if I tick either of these two boxes here, then when I create a transaction, it will give me the option of selecting which tenant this transaction applies to, because both of these are tenant related, paying back either rent or paying back extra charges. If we go back to this option now, exclude from disbursement calculations. Now by default, all rent and extra charges that we receive get paid back to the owner as money. This is for property managers. When we receive this money, we pay that money back to the property owner, and we charge a fee on it as well. Now if I tick this option, exclude from disbursement calculations, it'll effectively ignore this transaction when it comes to doing disbursements. It's like this transaction never existed as far as the disbursements are concerned. There'll be no fees calculated on it, and the money won't get paid back to the property owner. Now if I tick this one down here as well, this is a variation. What this means is the money that we receive will get paid back to the owner, but we won't charge a fee on it. So the disbursements partially ignores it, but partially includes it. So in this configuration with both of them ticked, the money gets paid to the owner, but there's no fee charged. If I just have this one ticked only, then there is no fee charged, and the money does not get paid to the owner. And if I untick both of these, then there is a fee charged, and the amount is paid to the owner. So I hope that makes sense. And the last option we have down here is the tax rate. Now this relates to GST or VAT type taxes, tax on the transaction itself. So we can specify what the tax rate is. If there's no tax on it, then we just leave it as 0. If there is a GST or VAT, then we might want to put in 15%, which is the current GST in New Zealand, or 10%, the current GST in Australia, whatever applies in your country. So that's the income groups. Now if we take a look at the expense groups, if I add an expense group, a lot of these things are very similar to the income groups. So again, we have a code and a description. Again, you can type whatever you like in there, it's not that important, it's for you to remember. Taxable, same as income. Should these transactions be included in our end of year taxes? Exclude from cash flow analysis, again that's the same as the income. Should we include or exclude these expenses from our cash flow? Again, another one is the same, exclude from profit and loss reporting. Should these expenses be included on our profit and loss report or not? We also have the exclude from disbursement calculations. Now by default, any expense which is related to a property, in other words it's not using the general property, it's actually targeted against a specific property, any expense is automatically deducted from the amount that goes back to the property owner. So for example, if we pay for some repairs to a property, and we've paid for that ourselves, we want to deduct that money from the amount that gets paid back to the property owner. However, if I tick this box here, then that tells the disbursement calculation to ignore this transaction. So it's as if this transaction did not happen. The money is not excluded and not taken out of the amount paid back to the property owner. The next option down here, or the next two options, relates to mortgages. If you're recording mortgages, then you get the option to tick this option which says that this transaction is used to pay back the interest on a mortgage. And this one down here is used to pay back the principal or the capital of the mortgage. And if you tick one of these two options, when you enter the transaction, it will actually get you to specify which mortgage it was related to. So you'd have to set up your mortgages first, and then by using these options here, RentHQ is able to keep track of your mortgages, so it knows the outstanding balance and how much interest you have paid and how much principal you've paid. The next option down here is to exclude the transaction, is to create an extra fee on these transactions. Now if we're a property manager, we might charge, let's say we do a repair to a property, and we might want to charge the owner an additional amount for that transaction. For example, we might say that we want to charge an additional 10% on top of the actual expense itself, or we can charge an actual value. So we might, instead of 10%, we may do $10 or £10, whichever, depending on your country. So this is a percentage or an amount, including taxes, that you want to charge on top of to create an additional fee. Now there's a tutorial on extra fees, and if you want to find out more about this one, I suggest you take a look at that tutorial. And the last option down here is we have the tax rate. So this is the same as income. This is as income groups. This is the GST or VAT tax rate. So if you want to apply any GST or VAT taxes on these expenses, then you enter a percentage down there. Now, just to show you where these groups are being used, just quickly, if we go over to the cash book and we add a transaction, this is where you select the groups. So if I mention that a group like this one is used to pay back rent, you notice down here I get to select a tenant. If I choose a different income group, such as miscellaneous income, you notice the tenant disappears.